We are back on the market close. It's been a pretty cool day in the broader financial markets. SMCI is up 20%. Dogecoin up 14%. Bitcoin, I'm looking at right now, 67,729. It just touched 67.9, so it's trying to get to that 68 level. Bitcoin right now, $67,662. Celsius is up 9%. I don't even see that one today. That's up 9%. HIMS is up 12%. Nvidia is up 4%, $856 on Nvidia. It's just been an incredible day in the broader markets. And what we're seeing right now is, I believe, a definite level of FOMO, probably the institutional and retail. But also, I think we're seeing a market that's realizing that there's not necessarily a reason for it to slow down. And some of these equity prices are reflecting that. Bitcoin being up today was a big thing for the broader markets. S&P is flat. S&P was up for the day. S&P is 512.63. It was at 513.44 at one point. Coinbase is at $230. It is up 12% on the day. It is $20 away from their IPO price at $250. So the fact that we're all the way back there is pretty incredible to see this all playing out. Palantir's down on the day. Tesla's down on the day. Robinhood up just a little bit, 1670. So we got a lot to talk about, a lot to get into. Thank you all for being here on the market close. Let's get into it. Others Inc., Midwest, Castori, Shem Pasta, what's up? What's up? Eric Wood, Missy, Joshua, John Stevens, Iceman, JJ, June, David, Ian, Addie, Kelly, hello, Ray, Jonathan, Darkstar, Sasky, Rose, Ian, Dragos, Kevin. All right, let's get into it. Shib, Tesla says right here, Shib also up 50% today alone. Shiba Inu is having a hell of a day. I think do I have any Shiba Inu? No, I don't have any Shiba Inu. I feel like I bought it a long time ago. I have no Shiba Inu, nothing. So if you have some Shiba Inu, you're up 50%. Okay, so I think we start off the conversation with what I bought. I bought some Tesla. Bought some good old Tesla. Look, I think that it was obvious, Tesla being down 8% of the day. I don't, it's not that it can't go any lower, but on a day like this where it collapses kind of dramatically, like I don't think there was a real catalyst for Tesla to be down today, but Tesla's down. So in my Roth, bought 10 shares. We have them at 187, and we'll just kind of let that position play out. Now in the Roth, we've got some Beto, we've got some Tesla, and we'll see how it goes from there. I think a lot of people ended up buying the Tesla dip right now. Right now, Tesla is at 190, I believe. Yeah, Tesla's 189 right now. So, it's up a little bit from that 187 level, but we'll see where it can keep going. Tesla, look, at the end of the day, I'm bullish on optimists, bullish on bots. That's my thesis for Tesla. Short term, the gross margins and the automotive volumes are not going to be the best, but long term, that's okay. And given it's in the Roth, let's hold it for the long term and see what happens from there. So there you go on Tesla. Sales did fall in China. Yes, that is correct. Sales fell in China, and also price cuts in China happened for Tesla as well. I think those price cuts kind of really made the street annoyed that they're continuing to cut prices. And that's probably why Tesla did not give any guidance last quarter on prices and margins and all that stuff, because ultimately they knew that it was not going to be the easiest to be able to deal with some of the margin compression issues they're having. But that's what we saw in Tesla. Tesla right now at 188. Sasky Rose says, why is CleanSpark down so much and Bitcoin is up? I think a really interesting point, and I'm going to read Jesse's tweet on this because Jesse is very heavy into the Bitcoin miners. Something that I think people really got to understand, because I think it's just common sense. And it's something that's it's weird that people are so concerned about it. He said right here, so I'm reading from his tweet, CleanSpark ran 265% in 7 weeks when Bitcoin only ran up 70%. People have to realize this is what you sign up for, and it's really worth it. Okay, that's what he tweeted. You cannot be upset that Bitcoin's going up and CleanSpark's going down for two reasons. Number one, CleanSpark's already up a lot, so a lot of what their gains have reflected have been pulled forward essentially by the market. Number two, if Bitcoin's going up, that's only good for CleanSpark. That's only good for Marathon. That's good for all these miners. They will eventually reflect the asset price going higher. It just might take a month or two, and it also might take their earnings to be able to show that, which is totally fine. That just means to me that's a phenomenal dip opportunity if you're bullish on the miners. And second of all, it just means that the miners have run up a lot and they're taking a little breather, but the asset itself is not going down. We cannot have Bitcoin come down to 50K, then the miners are screwed, because on their earnings after the halving event, they're going to get less, they're going to get half the reward. So the margins on their rewards need to go up if the supply of the rewards go down. So if CleanSpark mines 100 Bitcoin this quarter, but Bitcoin's at 40K and they could have mined 200, they don't get to make up the difference. Unless Bitcoin goes to like 70K, then they make up that difference, right? So I think it's very, very important for the miners to just keep doing what they're doing, but the asset price of Bitcoin going up is the most important bullish signal for the miners instead of being afraid, right, that the miners are going down when Bitcoin is going up. So there is a bit of a correlation there, but it might just take time for it to show. Dat Nugan says the China delivery numbers were down year over year in February for Tesla, but it was expected as Chinese New Year happened during February. Chinese New Year was January last year, just a stupid move down, honestly. Yeah, I agree. I think the Chinese numbers I was reading up about a little bit today, it didn't seem like it's a reason for it to drop $80 billion in market cap. I was like, that's kind of like, so just looking at it from a high level, I was just like, this is kind of dumb. So, I mean, we'll see. Maybe it goes lower, but because it rebounded from 179 to 200, I feel like it going all the way down back to 187 today just didn't make a lot of sense to me. And as a result of that, I took advantage of the dip, and I'm sure a lot of other people ended up buying the dip as well. Also, profit taking. Yep, people are taking profits, which is true. Now, the thing about people taking profits is like, yes, people are taking profits, but a lot of these stocks are controlled by algorithms at the end of the day. So I don't think when Bitcoin is running up to 68, 67,000, people are like retail's hungry to take profits. I think a lot of institutional investors are kind of playing with the stock a little bit more. A good picture I saw yesterday is that CleanSpark's institutional ownership went up dramatically over the past 2 months. I'll see if I can pull up that picture, but it's almost at like 100 million shares now, and it's not a company that has a ton of shares. So that itself is giving you a sign of kind of where the institutions are thinking of allocating their capital right now. Palantir, $23.99, they're down. We bought 10 shares for today. The reason they're down is because that S&P inclusion number was something the street was betting on. It didn't end up happening, and so because it didn't end up happening, street got a little upset. I think that's fine. That should be a decent dip and shouldn't be, too big of an issue. Let's get an update on what's going on with crypto. Then we'll talk about Apple and Google that have been absolutely schmacked today, along with Tesla. Those 3 out of the big 7 got hit. Here is Stephanie Link on what's going on with Bitcoin, the ETFs, and then we'll talk more about Apple and Google. Oh, also, we got earnings today. We got a ton of earnings to talk about. GitLab, another company I'm forgetting the name of. So we'll talk about those earnings right after this.
Link is the chief investment strategist and portfolio manager at Hightower. She's also, of course, a CNBC contributor. Steph, thank you so much for being here with us. Let's talk about whether or not this story needs to see broadening out, or whether it could be just like last year when the Mag 7 did all the heavy lifting.
Well, I hope it's not that last year. And I'm actually encouraged by what we've seen this year so far. We've had 16 of the last 18 weeks have been up. We haven't seen that, Dom, since 1971. I bet you weren't even born. So we are, though, seeing a difference in this year versus last year. This year, we are starting to see other parts of the market doing better. And it actually started in October, and then it continued in the beginning of the year, then it reversed. And then we saw Mag 7 again. So I think it's kind of healthy to see just this gradually happening. So it's not over for tech. Oh, my goodness, look at the semiconductors every day. They go up. But it's also other areas, like IWM was up 3% last week. Let's see if that continues. That's interesting. Crypto, also very interesting to me. Banks, and in general, financials, energy, so industrials. And so I think a lot of that, though, is because we have seen better economic data, and the economically sensitive sectors should do well based on the better data. We're growing at about 3% in GDP.
And look, I agree with her, dude. All the bears are calling for a crash, but the data has gotten significantly better. So it's hard to be able to make the argument that like things should just go down to go down.
Consumption is about 3%. You're starting to see pockets of manufacturing do well from all the infrastructure spending. And so that you kind of add it all up, and it's good for earnings overall, not just for tech, but for all of these other sectors.
Steph, so let's talk about what companies do benefit in that kind of environment. You mentioned a lot of potential catalysts, a lot of macro tailwinds. Where are the picks to be had out there, given that kind of a narrative, that kind of a story?
Yeah, so within industrials, I am overweight industrials, and I own a ton of them. But one that doesn't get talked a lot about, but it's a really well-run company, is Eaton Corp. And of course, they're going to benefit.
Palantir works with Eaton Corp, actually.
From all this infrastructure spend, $2 trillion that we passed last year, that's actually flowing into this sector this year.
Okay, so her core point is just that the numbers are good enough to justify this, and that's why we're seeing a lot of momentum happening. A couple of stats I want to read for you guys. We got 5 minutes until the market close. We also have some breaking news on Elon Musk and Tesla, Twitter past CEOs suing him, so we'll talk about that. But a couple of core headlines. All right, so Barclays is raising its price target on AMD to 235, up from 200. They maintain an overweight rating. AMD, I've said I can't really believe that this run is happening, but I guess the market's trying to front run what they believe their numbers will be like in the context of Nvidia. AMD right now 205. So Barclays price target is raised. Okay. Amazon's AWS launches a Saudi Arabia data center. They're investing over $5.3 billion. So that news came out today. Amazon obviously having enough liquidity to be able to expand across the entire world. This is bullish for Amazon, Mac 7. Amazon barely down today, down 0.34%, but just showing they have more pockets of growth as they begin to expand. Apple today announcing a new MacBook Air with their Apple M3 chip. The 13-inch model starts at $1,000, basically $1,100. 15-inch at $1,300. No one cares, quite frankly. No one gives a shit. Apple's down 3%. No one cares about these laptops at all. So yeah, they have some new MacBook Airs, but that's not enough to save the stock. And here's a really interesting stat. All the Magnificent Seven, here's their year-over-year increase in profit from the last quarter. So here's all the companies in the Mag 7, their year-over-year profit increase. So increases in net income. Nvidia's up 489%. Amazon's up 304%. Facebook's up 197%. Google's up 51%. Microsoft's up 26%. Apple's up 13%. Tesla is down 40% year over year in net income profits. So from that perspective, that's another reason why we're seeing Tesla kind of have a little bit more of a down date. All of the other 6 Max 7 have done really well given the past quarter in terms of their profit. Obviously, Tesla got hit with pretty bad interest rates and they were the most sensitive to them. So Tesla's been the one that's been struggling the most. But in general, we're seeing a lot more momentum for companies like Nvidia that have been able to increase net income substantially. And, that's been very good for Nvidia, up 3.6% on the day. Ian says, Mick, question, does SMCI and MicroStrategy do a stock split? I think it would be smart. SMCI right now, let's look at these guys. They're up. At one point, they were up 30%. They're up 19%. So they're taking a little bit of a breather. And MSTR is up. MSTR up 24%, 1340. The thing about the stock split is that they're going to encourage more volatility when the stock split happens, and they might not want that. For MicroStrategy, I don't think it matters. I mean, MicroStrategy is already so volatile. If I was them, I would split this thing by 10 ASAP. Get this to $134. The option chains are going to explode. People are going to feel like it's definitely a crypto play, even though people know it is. But 1,300 psychologically is not that exciting to people. So that would be important. Bitcoin right now, look at this, 67,900. It's trying to break 68 right here. And then SMCI absolutely should do a stock split. There's only 55 million shares outstanding. And if they do a stock split, even, times 5, it's going to be barely 300 million shares and people are going to be more excited to buy. So I think those would be smart things. I think we're going to see one of those soon enough. But right now, that is not happening here. Aditya says, what is your take on NYCB? I'm happy you brought that up. That stock is down another 20% today. It's down 50% in the past week. NYCB reported material problems in their loan book. This is one of those companies J-Powell probably hinted is going to die as a regional bank. His words again, consolidate, not die. But look, it is what it is. It's a regional bank that's getting hit. Ironically, TFC has been doing great today for me. That is a position, that is a regional bank I have position in. So that's up 2.4%. And KRE is doing great. So regionals are doing fine. This one regional, NYCB, is not doing the best, and that's okay. Eventually that'll play itself out. But I think even if it gets eaten up, it'll be all right. It's not a contagion that I think is going to exist in the broader ecosystem. It seems isolated to NYCB, but we'll see what happens in the future. Adam says, realistically, what percentage increase could Nvidia really still see? Look, here's a quick stat that I think people forget about. China was 25% of the revenue. China went down to 0% or 1% last quarter when the US passed the ban on their chips, and they still beat earnings by $2 billion. Now they're allowed to sell chips to China. It's like less special chips that the US forced them to sell. That revenue is going to come back. There's a lot of avenues for growth. I mean, they've projected 90% year over year growth. They are still going to grow, and that PE is going to get smaller. That 4P is now 32. I mean, it's going to get smaller. And so I don't think Nvidia is a bubble yet. I think, could it get to a bubble? Yeah. But I think the reason people keep buying it is because they think that there is still room to grow. And obviously they proved there's room to grow. And we're seeing with AI, Klarna, last week we talked about Klarna basically replacing 700 call agents using AI. All of that goes back to NVIDIA's GPUs, OpenAI, Sora. That's not even available to the public yet. All of that, when we do text to video, is going to go back to NVIDIA's GPUs. I mean, I don't think this thing is stopping anytime soon, but we'll see where it goes. All right, 4 p.m. Thank you, everybody, for being here. The market is now closed. All right, the market's closed. Here we go. KRE basically flat for the day. NYCB down about 23%. MicroStrategy up 23%. Let me know which stock you are holding that has done the best today, and kind of what stock you have a heavy position in that is either doing good today or in general has done good over the past couple of days. SMCI up 18%. AMD just phenomenal. Congrats to those who have AMD, basically up 15% over the past 3 days. Incredible. Dogecoin up another 12%, 17 cents. Deckers, S&P inclusion, they were up 3% of the day. Dell was actually down 2% of the day, but they were up 20% last Friday, or 28%. So Dell did really good. Bitcoin 67,575. There's a lot of resistance at that 68,000 level. I woke up this morning, the first thing I saw was Bitcoin was 65. The fact that we're here at 67 is just incredible. Celsius right now 87. That's up another 10% today. That's crazy. BBAI, yup, Big Bear. That bad boy is up 25% today. That one feels a little bit more memey, but that one is up as well. Root is up about 7%. ARKB ended the day up 7%. IBIT, BlackRock's ETF 7.3%. Nvidia again 3.6%. I'm seeing everyone's saying in the chat. Coinbase has done well for people. Someone shorted NYCB. That's doing well. Palantir, SoFi, Tesla are killing me, sir. I love how you said killing me, sir. Yeah, look, Palantir, Tesla, SoFi. I mean, they haven't moved a lot. Tesla is down for the year. SoFi hasn't moved as much as we thought it would move. SoFi 858, down 5%. I didn't expect that. I haven't even looked at today. SoFi down 5%. And then Palantir, I mean, again, we can't complain about Palantir. Palantir's had a hell of a year already. Still at 24. I think it's going to consolidate in this range until it makes the next leg up for Q1. Suraj says AMD and Hood have been great for you. Broadcom's great. ASML's great. Uber, that's been a really good one, dude. Uber got into the S&P in December, and they've just killed it. Today, they're up another 0.3%. So Uber's done pretty well. HPE is up 10.2%. That is the correlation with Dell, so that makes sense. Oh, we got earnings. What am I doing? We have earnings, folks. No one wanted to remind me we have earnings. I think it's because the earnings are not that exciting, but still. So March, what is today? 4th? Okay, the only real tickers I think that matter, I mean, you can let me know if there's any other ones, but we have GitLabs, SEMrush, which people don't care about SEMrush that much. People definitely don't care about Stitch Fix, but I kind of care about Stitch Fix because it's an interesting company. Okay, so these are the three. Let me know if we have to add any other tickers, but those are the ones I'm looking at. So let me pull up these earnings. Also, which one do you want to listen to out of the ones today? Do you want to listen to GitLab? I think that's a decent one to listen to. It's going to be boring, though. I mean, all of these are going to be pretty boring. Up 360% on SHIB. Okay, that's really good. Congratulations. That's look. I have no bias. If you're making money, that's all that matters. Okay, SEMrush is SEMR, GitLab, and then Stitch Fix is SFXIK. Yeah, there's no other real earnings that are that interesting, dude. No other earnings that are that interesting. Tomorrow's better. We have Neo and Target after the bell or before the bell. But nothing too crazy. GitLab's up 3%. All right, so GitLab's up 1.8%. SEMrush up 1.4%. Stitch Fix is down. GitLab earnings, I don't have anything on yet. Nope. Stitch Fix, I don't have anything on yet. And SEMrush, I don't have anything on yet. Again, not the most interesting companies, but we do have some earnings. We do have some later towards the week. We'll have some better stuff. Who bought the Tesla dip today? Who bought Tesla at 187 after hours down 0.12, down 7%? Dude, 7% is a lot. It's under 600 billion. Look at that. Tesla's literally under 600 billion right now. It was at 680 in the morning or in the pre-markets. So they got hit. HIMS is down as well. Oh, sorry. HIMS is up. HIMS is up 12%. So HIMS did what they had to do. I mean, they did what they had to do. What is Jerome talking about tomorrow? I think it's on Wednesday. He has a testimony in front of Congress. He's just going to talk about the market and like literally his 60 minutes interview is going to be the testimony. It's going to be so stupid, but Congress is going to ask him questions like they always do. GitLab is up 2%. SEMrush is down. Stitch Fix is down. Nothing too interesting. GitLab still don't have their numbers yet. Yeah, no numbers left. I'm going to pull up their IR. See, GitLab is like GitHub. GitHub got acquired by $7.5 billion by Microsoft. They're a developer op platform. And I mean, it's not the most exciting, but it is an interesting company. Google has a ton. Oh, crap. They're down 15%. Whoa, buddy. Holy dude, When I said GitLab is an interesting company, literally 30 seconds ago, it was at 74. There was nothing after hours. It was actually up a little bit after hours. That was a bad crash, dude. That was like, what did they say? Like, the market saw those numbers. It's going down more. It's down 17%. The market saw those numbers and it was like, no. What the heck did these guys say, dude? It's supposed to be a pretty simple company. Market cap 12 billion. It's not like it's a big company. All right, I got it. We got the, wow, you click on it, it says not found. I guess there's too many people refreshing GitLab. Google, well, I'll pull it up in a second, guys. Let me see if CNBC has it as well. Google also took a beating today. And what's interesting is that if Google gets below 130, we might have to look at some Google, guys. I mean, like, Google, I don't know if it deserves to be that low. So we're going to have to take a look at that if it gets that intense. Yeah, CNBC doesn't have them yet. They should be getting them probably soon. But Google got hit. So Google right now, it was at, look at this, 134, dude. It was at 132 at one point today. And then Apple also got hit. Now, Google's growing way more than Apple, so I feel like Google's a better buy. And I don't think that woke stuff is going to last forever. I think if it gets to 125, Sundar is going to start chopping off jobs. He's going to get aggressive. I don't think they're going to let this happen. Or they're going to chop off Sundar. Something's going to happen. Something is going to happen. Rebecca says, hello, Amit, just joined in with you today. Hello, Rebecca. Thank you for being here. If you're new to the channel, I know we got a bunch of new people. Let me know in the comments. I'd love to welcome the new people that are here. We do a market close every day, and it's super, super fun. And thank you all for being here today. P. says Google's AI is very undervalued. I agree. I think it is as well. The problem is they're dealing with some cultural stuff right now. That's the issue. Okay, so GitLab is not letting me click on it. I'm going to use Twitter instead to get their results. GitLab currently right now, it is down 15, dude. Wow, it's not recovering. It's not recovering. Okay, so here we go. GitLab. Here's the basic numbers that I have. EPS 15 cents beats 8 cents. That's good. Sales 163 versus 152. That's good. So they beat on revenue, they beat on EPS. 2025 revenue, they see 725 to 731 million. By the way, this is up 33% year over year, so they're growing 33%. First quarter revenue is basically growing flat quarter over quarter, but year over year, I think it should be fine. Estimates were 732. So that guidance is no, that guidance can't be the reason they're down, dude. That guidance is 1 million lower than what the street thought. By the way, Stitch Fix is down 10%, which I think we knew was going to happen. GAAP operating margin of 21%. GAAP net loss 23 cents. Why is the street upset? Look, Q4 revenue grew 33% year over year. They delivered 1,900 basis points expansion on non-GAAP operating margin. I'm pleased to share that with consistent execution across the business in full year 2024, we delivered break-even cash flow a year ahead of our commitment and recorded our consecutive quarter of non-GAAP operating profits. Yeah, why are they down? Why are they down? MicroStrategy news is out. Okay, hold on. MSTR IR. What is the news on MicroStrategy? Let's see. Do they have any interesting? Well, let me know what their news is. I don't think they have any press release that I'm looking at. Let me know if there's any big news. Any big news there. Yeah, why is GitLab down? I don't know. 15% seems aggressive, dude. 15% seems like a dip that we need to look at seriously. I don't see anything here that's bad. I don't see anything here that's really bad. GitLab is a DevOps platform. So if you're a developer and you're coding and you're deploying software and you're making repositories of your code, that's what GitLab is. I mean, it's the average person. It's like highly technical. It doesn't matter. But for developers, it's kind of like their Google. Same thing with GitHub. Like, these are platforms that developers use religiously, and these are fast-growing tech platforms. These are platforms that are needed across every single enterprise that has any level of technology incorporated into it. So it's an important company. It's not as big as GitHub, but down 14% doesn't seem to make sense to me. Adam, what's up, bro? I know you're looking at that MicroStrategy and you're probably smiling a little bit. I know you are, Adam. So there we go. We got Adam in the chat. Suraj. Okay, so here's the quote. MicroStrategy to offer 600 million of convertible senior notes, intends to use the net proceeds of the sale of the notes to acquire additional Bitcoin. Okay, so is MSTR down on this news? MSTR. Yeah, they're down 4% on this news, but it's not a big deal. So MSTR okay, so I need to understand if this is like dilution or not. It might be a little bit of dilution. This doesn't matter. It's down 4% after hours. Yeah, that's not going to stop their run. MicroStrategy already collateralized their debt to make sure that, like, how do they buy all this Bitcoin? They had to borrow money. So they borrowed a shit ton of money and they said, hey, if our stock is above $517.93 by January 2025, we don't have to pay back the debt. The debt holders, the banks, they can just take MicroStrategy stock as like payment for the debt, which will appreciate way better than the 0.75% interest rate that the bank holders would get. So that's why they were down for this. And the shareholders would get diluted when they issue more shares in January 2025. But would it really matter if you bought MicroStrategy at 500, 600 and the stock's at 1,400, 1,500? Like, no one would care, right? So this to me is a nothing burger because it's going to create more dilution, but the stock is up so much. It doesn't matter. The stock is up 300% in the past month. So it doesn't matter. Bitcoin keeps going up. Their profits will keep going up. They want to buy more Bitcoin. So if they want to buy more Bitcoin, which is the reason they're even doing this 600 million offering, then there you go. They're going to buy more Bitcoin. And if they buy more Bitcoin, that's going to be beneficial for MicroStrategy. GitLab. Okay, so is GitLab, where's GitLab now? GitLab is down 10% after being down 16%. Maybe the market started realizing nothing is wrong in their earnings. Stitch Fix, I'm going to pull up their numbers. Stitch Fix is kind of like a fun company. I'm just curious to see how, it's like Bumble to me. It's like a very kind of fun app, and it's weird that it's public, quite frankly. Like, I was like, why is this thing public? I have no clue. They went public in the bubble. Same thing with Bumble. So, okay, here's Stitch Fix. Let's look at this real quick. Okay, I don't care about all this. Give me the numbers. All right, so active clients, they have 2 million users in Q2. That's down from 4 million. So, wow, they lost 17% of their users. Oh, my God, look at this revenue, dude. Look at this revenue. This revenue, they're down 21% year over year, and they're projecting to be down 18%. Do you guys see this? Oh, you're not seeing this. I'm sorry. Here we go. You should see it now. You see it now. This is bad, dude. This is not good. This is not good for Stitch Fix. GitLab's recovering a little bit. They're down 7% now. Stitch Fix is down 8%. Stitch Fix is a $400 million company. This is an example of a company that is a small cap that needs rates to come down because the only reason they're public is because rates went up. Rates were down in January or in 2021. And now you're seeing the problem with them. Dude, they lost 21% year over year revenue. They're down 17% year over year in users. Gross margins are down from 2021, 45 to 43. Advertising is relatively the same. They're definitely not profitable. Doesn't look like they're profitable. Every company that's non-profitable uses adjusted EBITDA before they show profitability. This is why Munger said adjusted EBITDA is bullshit. Like, all these guys show their adjusted EBITDA before they show their net income because they know that their net income is not positive. It is what it is. They did $1 billion. They're projecting 1.3 billion in revenue. They did 310 million last quarter. Gross margin 44%. That's weird, dude. This is a software play. I thought the gross margins would be better, and they're not profitable. There you go. That's Stitch Fix. So if anyone owns that one, that's why it's down. Okay, so GitLab still down 10%. SEMrush down 4%. SEMrush is an SEO company. It's a company that people use to be able to track how their competitors are doing. So if you're building a website and you're trying to compete with, like, I don't know, if you're building a website against CNBC and you're trying to build your own financial media website, you want to track all the keywords CNBC is ranking for. And so SEMrush is a platform that allows you to do that. It's interesting. Market cap 1.86 billion, but it's not like the most exciting company in the world, right? So SEMrush is down about 4%. Nothing too interesting there. Okay, let's look at this. I wanted to play another clip on Bitcoin as we're seeing Bitcoin and the momentum of it continue to go higher. And then we'll get back into earnings. And then today, let me know if we don't want to listen to an earnings call, we can end early. That's totally fine. If we want to listen to an earnings call, Bitcoin 67.3, then we can listen to GitLab and see what they have to say. All right, here is Bitcoin and why it could reach potentially 300,000 in this bull cycle. Here we go.
At Asset Exchange and Tether co-founder William Quigley's with us. William, it's good to see you again. I wonder, this is another story where there is arguments on the speculative side, but also on fundamental analysis of at least money flows.
Yeah, I agree. If you look at where we are pre-halving, that's going to happen in April, where Bitcoin's reward for miners drops by half. If we look at where we are versus the last one, I'd say, which happened 4 years ago, we're in better shape. Obviously we didn't have the ETFs back then, If you look at things like derivative volume, it was nascent 4 years ago, now very high. We've just hit a record. And the ETF flows have actually surprised me. I was a little skeptical that they would take off quickly. And now we have close to, I want to say $50 billion. It's about 740,000 Bitcoin held in these ETFs. Daily, we're getting between 150 million up to $500 million flowing in. So there's a lot of positive forces that are pushing Bitcoin up right now. And this is before the halving, which is usually after that fact when Bitcoin really skyrockets.
How do you describe to viewers the mix of institutional versus retail interest vis-a-vis, say, prior rallies?
Oh, anything from like pre-2020, there was very little institutional interest in Bitcoin. It was a retail-driven, globally retail-driven phenomenon. And now I would say there is a lot of institutional money that tracks it. It's also why you see such interest in derivatives. The volatility in Bitcoin, I think, is one thing that really attracts a lot of institutional investors. And you have to understand that, Bitcoin is maybe the only globally traded asset that I know of whose demand is purely based on sentiment. There's not a Bitcoin company. There isn't Bitcoin price earning ratios. It's just a sentiment driven token. And what you can say about that, of course, is that sentiment has no limits. You can always be more optimistic. And so this rally may be the biggest we've seen. If we just look at where we stand today, pre-halving for Bitcoin, and look at historical patterns, that would suggest, and I'm not predicting this, I'm just saying if you applied the historical patterns, it would suggest Bitcoin being in excess of $300,000 at the peak of this next bull market. And since all tokens are correlated to Bitcoin, that means that all the other tokens like Ethereum and Solana and some of these others will move up in lockstep. Those, however, usually move higher, directionally the same, but since they have a lower market cap, they tend to move up to a greater degree.
So the core argument he's making there, which is I think we've been talking about a lot on the channel, is that the reason this run feels a little bit different from 2021 or previous Bitcoin cycles is because institutional investors have fundamentally changed the dynamic by which the supply of Bitcoin are even available. And Michael Saylor did a great talk over the weekend. I listened to it, and he kind of pinpointed why companies want to allocate to Bitcoin, why pension funds want to allocate to Bitcoin, why 1 or 2% of your overall investment portfolio, which might be $10 billion for a pension fund, doesn't matter to them, right? It's 1%, but it matters a lot to inflows on the context of Bitcoin. And so they're not selling for a very long time. The OG hodlers of Bitcoin, 70% of Bitcoin supply is not moved in 2024. So the question becomes, when does it start to sell off? And I think, going into the halving, you would argue that if the supply is already hard to find, it's not like it's going to be easier to find when there's only 450 of them available per day. So it just seems like the reason there's not this massive, decline we're seeing in the $60,000 range back to the 50,000 is because people have kind of realized that that's happening seriously. And as a result of that, you got Michael Saylor today, who's trying to buy $600 million more of Bitcoin by collateralizing the company or issuing convertible notes, even when there's a supply shortage. Why? Because even he understands that, all right, this thing is getting intense, right? And as a result of that, we're seeing more momentum there. Coinbase and Robinhood, by the way, this stat blew my mind today. I've been tracking these numbers all day. So already institutional owners are coming in troves, right? They're coming in aggressively. Look at retail. Robinhood is number 8. Coinbase is number 7 today. Robinhood and Coinbase were number 19 and number 31 last week, and I've been slowly seeing them creep into the top 10. Today, they smashed through the top 10. Robinhood was number 12 this morning, guys. It moved up 4 spots. Number 8 here, and then Coinbase, obviously number 7. Coinbase was number 30 last week. They got to 13, then 12, then 11. Now they're in the number 7 range. Coinbase had an outage today as well. So what does this mean? This means retail starting to get excited about buying these assets. It's the greatest marketing in the world. These companies have to sit back and just have their apps on the platform, and people will search for them. People will search invest crypto, invest stocks, and then boom, these guys pop up and they enter into that ecosystem. Robinhood, I think people forget, Robinhood could barely add 30,000 net cumulative funded accounts every quarter for the past 2 years. In Q1, 2021, like early 2021, if you look at their user numbers, they were adding 4 million, 3 million users a quarter. Like the growth was ridiculous. All of 20 to 2021, they've added like 23 million people, 22 million people, and they barely added a million more in the next 2 years prior. So Robinhood needs this momentum. Coinbase needs this momentum, and all those people coming in, you're just going to have a lot more people that want to access crypto. And I think that we're seeing that on an institutional side and obviously on a retail side as well. And so that's kind of what we're seeing right here with Bitcoin. Ethereum as well. Someone on Coinbase bought 4,500 Ethereum today. So that's what, 4,500 times 3,500. That's what? That's like 30 million. No, that's 15 million. 15 million. So someone bought 15 million of Ethereum today. The rumors of a spot Ethereum ETF are becoming stronger and stronger. We saw what happened with Bitcoin with that spot ETF. Obviously, if there's a spot ETF on Ethereum, I mean, look, it makes a lot of sense. Look, and I know people don't want to buy Ethereum because it's ran up from like 2,500 a couple weeks ago. But if there is an ETF coming, there's going to be a lot more institutional demand. The thing I don't understand about Ethereum is the supply. I don't really know if there's a fixed supply or what the fixed supply dynamics look like, whereas Bitcoin I have a much better understanding of. So I don't know if the same supply shock would exist, but there's definitely going to be demand side pressure coming in. And that would obviously be beneficial for Ethereum. So Ethereum up 2% today, Bitcoin up 5.36% on the day. Tesla still down after hours, 187 pound here, 23.95 down after hours as well. Dogecoin 17 cents. Where's Robinhood? The Robinhood conference, I did a live stream on them today. The biggest stat, I'm not going to repeat everything, but the biggest stat, they're down a little bit after hours, 1662. In February, they had 3.5 billion of deposits. 3.5 billion of deposits in February alone. January was 3.8. So last quarter, they did 4.6 billion. In the past 2 months, they did 7 billion, which means next quarter, they're probably inching towards that 10 billion mark in deposits. That's going to be very good for Robinhood. Now, PayPal. Jesse actually tweeted something important today about PayPal, and Tom Lee ended up retweeting it. So Jesse's argument is that, and we know Jesse, friend of the channel, he's very big into PayPal. Jesse's argument is that PayPal is actually a crypto play. And people are ignoring it as a crypto play, including myself. I mean, I have my PayPal. I don't want to have it anymore, but I have it. And so I'm just letting it ride. If it turns into a crypto play, this could get exciting. So here, Tom Lee says, good rationale for why PayPal is a stealth Bitcoin play. So let's read through what Jesse says on PayPal. Let's give an argument for why it's the case. So he says, people haven't caught up to the narrative yet, but you can buy Bitcoin and Ethereum on PayPal. He's correct about that. And it doesn't hurt that they have one of the fastest growing stablecoins on PayPal USD. Remember, narratives matter a lot in a bull market, more than facts most of the time. Oh, that's all he said? Oh, I thought this was a long post. Never mind. Tom Lee was like, yep, that's a good narrative. Dude, I thought this was like a essay post or something. I thought this was a ton of due diligence. This was one sentence by Jesse. That's all he needed. There you go. Tom Lee's like, yep, that's why PayPal's a crypto play. You can fucking buy Bitcoin and Ethereum on PayPal. There you go. That's the due diligence. Well, I wish PayPal would lean into this and somehow market the fact that they're a crypto play, because they're right. You can buy Bitcoin and Ethereum. Now, I don't know who in their right mind is buying Bitcoin and Ethereum on PayPal. Like, I don't know who's doing that shit. But if people are doing it, then obviously, that's good for PayPal, I guess. But and here's the thing: if they are buying PayPal on, or they are buying Bitcoin on PayPal, and PayPal's numbers don't reflect that, maybe in next quarter they have some big beats because they got all this crypto revenue coming in that the street's not pricing in. One can dream, right? Like if PayPal's getting a shit ton of crypto revenue and it's not factored in, they're up 1% after hours. I don't think that's happening, by the way. I think maybe it might happen, but the far majority of it's going to Robinhood and Coinbase. Like, it's not going to PayPal. So if it is happening, cool, but probably not happening. And I mean, if it's not happening, then we just have to hope PayPal can beat on their regular numbers. Why is PayPal dropping other than it's just what PayPal does? I mean, again, it's down 1% for the day. It's kind of been stuck from this 58 to 60 range, again, down 0.45% after hours. It's just kind of stuck in a range. There's not that much. It's weird because there's 16 million shares in volume. So you would imagine there's some movement there, but none of that volume is enough to be able to really get it moving. The order flow, if you're looking at right here, inflow 255 million, outflow 121 million, still not enough to move the stock. And then I guess the toots might be accumulating, a little bit on the dark pool, and maybe that's why it doesn't have a lot of volume, but overall not moving too much. What would be really interesting is if Warren Buffett's secret stock is still a secret, which it is, but if it's PayPal, that would be interesting. So here's an update on that. I was reading this the other day. It's on Pro. Never mind. I was reading on a different article. I wasn't reading on CNBC. I'm gonna see if I can find the article. But Warren Buffett on CNBC on this secret stock. What I was reading on the article a couple of days ago was that there's more of a financial fervor that analysts are expecting is this secret stock, and it's likely something that's been beaten up, which is why Warren Buffett doesn't want to disclose it because it's beaten up so much. Investors will come in to kind of rescue it as soon as it's disclosed. That sounds like PayPal to me. PayPal is obviously beaten up. It's at 2017 levels, and it's a financial. So I'm using Webull for those that are asking. I'm using Webull. So if that's the case, I mean, look, it wouldn't be crazy to think that it's, and he can probably be acquiring it in a way that doesn't cause PayPal to moon. And the SEC says he doesn't have to notify people, which is great for, keeping the stock down. So we'll see what happens. But I mean, that right now is one of the reasons why maybe PayPal continues to be down. Now, granted, I don't think that's going to happen. I think it's something else. But if it is PayPal, that would be exciting, dude. If it is PayPal, that would be pretty exciting. We're going to get CPI data next week, so that'll be really important. But so far, yeah, we don't know what's going on there. MicroStrategy down about 6% after hours on that convertible debt offering. Yeah, that's not a big deal, dude. That's not. I mean, the stock's up 23% today. That's just the market being stupid. As long as Bitcoin is up, MicroStrategy can dilute as much as they want. They're going to buy more Bitcoin. The gains on their Bitcoin will outpace the dilution, which means they're going to be fine. and it's not going to be a broader issue for MicroStrategy. Here's JP Morgan talking of retail markets. Here we go. Here's what he has to say.
Arc House Management and Brigade Capital raised their bids for the retailer. The new offer values the company at more than $6.5 billion.
And when I mean retail, I mean like retailers, not retail investors.
My next guest recently raised his price target on that company following last week's earnings beat, citing potential for multi-year growth. Joining me now, JP Morgan's Matthew Boss. He is ranked as the #1 retail analyst on the street by Institutional.
That is one hell of a haircut, dude. That's a haircut. I like it. I just haven't seen anything like it, but that's a haircut.
Investor, welcome back.
Thanks for having me, Scott.
How's this going to play out with Macy's, do you see?
Look, I think Macy's is laying out a fundamental opportunity. That was their bold new chapter plan. We actually were in stores this weekend, and I'll tell you, some of the test stores have better staffing. They're amplifying the key brands within the box, and they're really focused on expanding the TAM, which I think factors into a lot of retail consolidation. Macy's itself closing the worst 25% of locations since the pandemic.
Sounds like you're describing what you think might be an inflection point. I mean, those are my words, not yours, but that sounds to me what you're describing. You raised the price target to 23 from 19 a week ago.
Yeah, look, I think we're hitting an inflection for all of retail, meaning you had a period of brick and mortar consolidation. I think Macy's is potentially signaling the later innings of this in this final consolidation of 25% of the boxes. I think you're seeing an intentional consumer out there that's shopping for brands. They want value and they want convenience. And that points to off-price, best-in-class brands and the retailers that sell those brands.
So who are the...
If it was Warren Buffett buying Macy's, that would be really interesting, dude. Warren Buffett buying Macy's would be exciting because that's not a financial. That's a beat-up retailer that might actually get some momentum. The earnings were not bad. The earnings were pretty good. If Buffett's buying Macy's, I mean, dude, if he thinks there's a turnaround for Macy's, that would be exciting. Let's get Gene Munster talking about Apple. Apple's obviously down today. Farzad, thank you for being here in the chat. Everyone knows Farzad. He is pretty much like the top 3 Tesla creators on YouTube. So I had an interview with Farzad on Lunch with Amit last week. You guys can check him out or check out the interview. And we talked all about what's in the future for Tesla. And again, I bought 10 shares of Tesla today. Okay, here's Gene Munster talking about where Apple is going in the context of AI.
Of Apple are under pressure after the European Union hit the company with a fine of nearly $2 billion for antitrust violations over its music streaming apps. Apple said it plans to appeal that decision. Now, this comes as Apple CEO Tim Cook is also facing some heat from investors for lagging behind its peers when it comes to AI investing. Here to weigh in on all of this is Gene Munster, managing partner at Deepwater Asset Management. Gene, thank you very much for joining us as always. We always turn to you for all things Apple. So take us through what exactly this all means for Apple and whether or not there is a bull case to be had at current levels for valuation.
Well, what it means for Apple in the near term is investors are voting that they don't have confidence in Apple's AI strategy. And that's understandable, of course, because it's just been over the past couple months that we've heard more about that. And ultimately, when you think about their AI strategy, it really comes down to how are they going to make money on this? And investors now are generally on the same page that this June at WWDC, we're going to see them come out with their first foundation model. As a reminder, this would compete with GPT, it would compete with Gemini, Anthropic, X.AI. This is one of the kind of top 4 or 5, Llama from Meta. Really important that they have that. So that's one piece. Coming out with that model still doesn't answer the fundamental question that investors are asking, again, which is what does this mean for the business? And I'm going to fill in some of those blanks, is that what it means for their business, of course, they will use AI to make better predictive text and add kind of the fit and finish around their hardware and software, like some of the Macs that they've announced today. But more importantly, this is an opportunity they come out with a subscription for personalized AI. And I think this is one of the big unlocks for consumer value in AI. And essentially, it is a unique place that Apple has because of their role with privacy and security and the trust that they have with consumers. People will be willing to let Apple use their data, opt in, to allow these AI bots to do tasks for them. Contact your utility company, book a trip, compose emails. There's a lot that can be done. And when I think about that opportunity, it comes down to a subscription business. And if you look at their active install base of devices, that's something that they're really clear about. It's 2.2 billion, growing about 8% a year. They don't give out the active user number. I estimate that that's about 1.4 billion. But if 20% of that 1.4 billion would opt in for a $10 a month personalized AI service, so it's going to take a few years to get there, that would add over 15% to Apple's earnings. And so, Dom, when you put all of this together, understandable investors' reaction, but I think investors are forgetting that there are almost 5 billion people that live their lives throughout the day on Apple devices. That stickiness is a huge long-term opportunity for them to sell AI products into.
Gene, I do have a question about this EU fine. I understand it's $2 billion as of now, but that there's a high likelihood that Apple will appeal. Let's say worst case scenario, it doesn't work. They have to pay the $2 billion fine. Was it worth it? I mean, Apple has a pretty big cash pile. Was it worth it for the business? Perhaps it did get, even if it believes that it got it fair and square, for the revenue that it has acquired in the EU.
So the $2 billion, I agree. I think it's probably going to be more like $1 billion after everything is said and done. It'll take a year. It's 3% of their cash at the $2 billion level. I think the bigger question for me is what impact is these type of fines going to have on Apple's App Store revenue globally? And on their last earnings call, they talked about that the App Store in Europe was 7% of total App Store revenue. So that basically equates to 0.5% of Apple's overall revenue. So they knew that this was coming, these changes were coming, that this fine potentially was coming, and they wanted to get in front of investors and remind them how small of a piece that this is. But it does not change the bigger question, is that there will be changes coming to Apple's App Store across the board. And this is probably 40% of Apple's earnings come from services more broadly. And so I think when I think about that dynamic, they'll eventually pay the fine. And what really sticks out, and I've been closely watching what's happened in Canada, the US, South Korea, Japan, the EU in terms of all these changes. Apple is really smart in terms of how they navigate this. They will go and make changes to accommodate the courts, but then they find ways to essentially charge the developers anyway. And I suspect that that will frustrate and infuriate some developers, but at the end of the day, they're building huge businesses off of Apple's backbone. And I think despite their frustrations, they will continue to pay, and Apple will actually maintain better economics for their App Store over the next 5 years than I think what investors are expecting.
I don't know, dude. Apple is not the friendliest app store in the world. And I think that I think that, yeah, they'll find a way to get around this, but it's just so much hurdles to go through. Now, what Gene said was correct. That's 40% of the revenues. They're going to correct, they're going to protect 40% of the revenues, right? And they need to protect 40% of the revenues. But I feel like there's got to be a way to make these developers whole, because, I mean, a company like Spotify should not have to be struggling to make some money just because the App Store is taking so much in fees. Like, they're willing to pay fees, but like, even if Apple said, okay, instead of 30%, we'll do 25%, I feel like Spotify would be okay with that, or at least they would feel, a little bit better. But Apple's ruthless here. And the question becomes, if Apple's ruthless, how are they going to be able to justify that growth with a developer population that is really upset at what they are showcasing? We got a new tweet from Pounter. Let me show this one. Yeah, guys, I think we'll end it and not listen to an earnings call. I mean, there's no point to force ourselves to listen to GitLab. I mean, none of us really care about it, quite frankly. So yeah, I'll get you guys out of here. Let me read this one Pounter tweet, and then we will be done for the day. Daily Pounter episode will come out in probably 3 hours, just around 7. So we'll have Daily Pounter come out today. So here's what Pounter tweeted just now. We are proud to announce a partnership agreement with the Ministry of Economy of Ukraine, which paves the way for a digitally led demining approach backed by Pounter AIP. This work will support the goal of bringing 80% of potentially contaminated land into use within 10 years. And here you go, Lewis Mosley, the head of Pounter UK, speaking with UK officials, signing their deal. There you go. That's the deal we talked about this morning. 10-year deal. Don't know what it's worth, but I'm assuming it's going to be worth money either in this deal or in other deals in the future as Pounter furthers their relationship with Ukraine, and hopefully furthers the relationship with NATO writ large throughout the entire globe, because NATO needs them, and we know NATO needs them. NATO's not willing to pay yet, but eventually NATO will be willing to pay. Eventually they will have to pay, in my opinion. Eventually they will have to pay. And here's MicroStrategy right here. Here's Michael Saylor just tweeted out that convertible senior notes. MicroStrategy's down on this news, but again, this 600 million is going into Bitcoin. It's not like it's going anywhere else, right? So you've got even more supply side pressure coming from Michael Saylor, who's ready to buy up even more Bitcoin now as well. All right. John says, Amit saw a post about a guy being down 40% on his Tesla position. Would you be averaging down or just letting the position ride? If I was down 40% on my Tesla position, yeah, I would be average. It's what I did on Palantir. Remember, I was down, dude. I mean, I was down like 70% on my Palantir position at one point. Like you just keep buying. You just, I mean, if on a company like Palantir or Tesla, if it was some stupid stock, I would be like, yeah, take the losses. But on a company like Palantir and Tesla, you just keep going, right? And this year is a year to buy more Tesla at cheap. It is what it is. To me, it's cheap if you believe the long-term potential, which I don't bet against Elon, so I do. It's not cheap if you don't think they're actually going to execute against FSD, Robotaxi, or the bot. I think they will. And so to me, it's incredibly cheap. But this is a year to DCA and continue to get more and get that average down over the long term. Writ large, everyone take a drink. All right, that's it for me. We are done for today. Thank you, everybody, for being here. Oh, what was the Elon news? Thank you, Shimpost. Let me show you guys that real quick. Elon's Twitter is getting sued well, they're not getting sued, but they're being asked for 130 million from Parag Agrawal. Do you remember this dude? It's so ironic. I was like reading this guy's old tweets last night. I was just randomly going through it. I was like seeing that Tesla Elon saga with Twitter unfold. And today, him, the CFO, and the chief legal officer are suing Twitter because they said, hey, you owe us severance. And Elon said, no, I fired your ass. You don't get any severance because when you get fired for a probable cause and you're a C-suite, you don't get any severance. And they're like, well, you didn't have a probable cause. And so they're asking for 130 million. I don't think Elon's going to pay them this 130 million. Elon's suing OpenAI. He's getting asked to give $6 billion to the lawyers that took away his compensation. Now the old Twitter CEO wants to get 130 million from him. He's dealing with a lot. And the stock's down 7% today. So Elon's dealing with a lot, but in the face of all of that, I don't bet against Elon. And so let's see what happens over the long term, but we'll continue to support and buy Tesla stock because I think it's cheap over the long term, especially because the robots. You guys know I'm bullish on the robots now. I think the robots are going to be great, and we'll see what happens 10 years from now. All right, that's it for me. Thank you everybody for joining. I will see you guys on Daily Palantir. That episode will be out in a couple hours, and then Finance Junkies tonight, 9 p.m. And we'll be back tomorrow on the Market Open at 8:45 a.m. Thank you, everybody. I appreciate it, and I'll see you guys tomorrow. Bye, everyone.